So in 2 minutes more, we're going to start. I hope everyone is ready. Please, if you can see my screen, just let me see I in the comment section, please. If you can just see my screen, just I. Yeah, 3. Yeah, wow, that's good. I think everybody can see my screen. If you're having any problem, consider. So who won the prize? If you're marking the, someone actually won it already. I think the person is going to, we are going to disclose. We're not going to tell you guys the person now, so the person will be like, I already won today, so shall calm down. You feel even video one, but proof the, so oh. So we're starting in 1 minute more. Mhm. So let's go. No time. So everybody, you're welcome back. And then we continue today. So you already know my name. My name was actually Damlari. My name was actually Damlari. So my co-host was actually Negi. So we are together going to do this also today. So when we are talking about support and resistance, what actually come to your mind? Support and resistance. What come to your mind when you see support and resistance? The both two have meaning and they are opposites in something. Support and resistance. So let's move further to see what support really means. What is support and resistance? So a lot of people can have a different definition for it. So we cannot tell you like we are the best. But support and resistance is one of the most widely used concepts in FX trading. So this was actually the most used. When price move up, then pull back. The highest point reached before the pullback is now resistance. So I'm going to show you everything, the example on the live chart, and I'm going to show you so you can understand. So the support, the resistance means when when market moved up. Don't forget market move in two kind of way, either up or down. So when market move up, so the highest point reached before pullback is called resistance. And same thing goes to support too. When price continue up again, the lowest reach before it started back is now support. So I'm going to show you guys the example of it so you guys can see it clearly. So you see, this is a clear resistance and support. You see this resistance and this support. So resistance, if you don't forget, resistance was actually, if you can look at this place very well, was the highest point reached before the pullback is now resistance. So if you see here, this is the highest point here before the pullback. So here serves as resistance because why? The market's pullback. And you can see here the market actually gained a lot of strength. Then we can call this place a support zone. Why? Because if you can come here also, when the price continue up again, the lowest point reached before it started, the lowest point reached before it started back up is now support. Simple. Nobody is. So once you see the market only move in two kind of way, buy or sell, go up or come down. That is it. So here is the resistance. You can see right here was actually resistance because the market actually pulled back. and why here was actually a support zone. I believe you guys actually understand a little thing I just explained now. So let's move to the next one. This is the live chart. This is exactly the live chart. You can see the resistance here. When the price pull back, like the price retest, you may not even know the meaning of retest, but let me just say the price drops. The price drop from this zone. So this zone also serves as the resistance. Then when you see this zone here, you can see resistance zone also here. We have a resistance zone here. And why we have a support zone here, we have a support zone also last year. Because why? These are the zone where the market actually reacts, where the market reacts. The market reacts here, that the buyers are in control of the market here. So that's the main reason why you can see the buy, and that's why here starts as a resistance, starts as a support zone here. You can see the arrow here, indicate here as a support zone. And then the sellers also are also in control of the market here. So they both work as oppositely. I believe I'm saying something. So the both, so here was also serves as resistance. You can see, let me just say drop. Here, go up. Simple. That's support zone and resistance zone. This is a very, very important thing you guys have to understand before you can proceed to the next thing. So I believe you guys understand. So the most basic way to treat support and resistance are advance at the break. The same thing here. What they are trying to say was actually be like, when the market actually break, it is possible to react on it again. So I think when we move further, you will understand it. You can see the support. Buy when the price fall towards a support. This is the support. That is when you see everybody buy when market is in the support, while everybody sells when market is in the resistance. I believe you guys understand something. Please let me see in the comment section if you guys actually understand something. Let me just say I. Yeah, wow, that's cool. That's cool. That's cool. That's cool. So proceed to the next. Sell when the price rise towards the resistance. So everything they sell when the price comes to the resistance, while they buy when the price comes to the support. Simple. Nothing else. It's not magic. So I think, so my brother also will come in now because, we share it together. So we can give you guys the best. We can give you guys the best. So my brother will come in and
Oh,
and
Dammy, thank you very much for that. So, good evening, everyone. My name is Niyi, and I'm your co-host. And so far, so good. I can see Dammy has taken us through the first few pages of this presentation for today. So, I'll just proceed from where he stopped. So, he has explained what support and resistance means typically on the chart and what it means to trade support and resistance. We either trade, we don't trade when a market is already on the move. We trade either when market comes back at a bounce or when market breaks a particular level, probably a support level or a resistance level. So to continue, if you want to trade at the bounce, you buy when probably market breaks a resistance. We all know what a resistance and support is now. Resistance is resistance is the level that indicates where market has bought to, while support is the lower level. Resistance is at the top, support is at the bottom. So at the bounce, we buy when market falls towards a support level. So once market gets to a support level, you buy when markets move to a support level, and we sell when markets rises towards a resistance level, which means you sell high, you buy low. I hope that English is understandable to everybody. When market is at a low price, when it is dropping to a low level and it gets to a significant level, which is the support, you buy. When market is at the high level and it gets to a significant level where it is at the top, you sell. So at the break, moving on to the next page, at the break, we buy when price breaks up through a resistance. So, and then we sell when price breaks down towards a resistance. So what this means is that in case this support level now, when this support level is when this support level seems like it won't hold, you get the support level is the level that is below now. Once market breaks it, you know that okay, this is not holding, then you sell. But same thing applies to the resistance level, which is the level at the top. Whenever market moves towards it and you're expecting to sell and it doesn't respect your expectation, once it breaks that resistance level, you buy. That's what that is typically saying. So things to note when trading support and resistance. Support and resistance level are not exact numbers. At times you see a support and resistance level that appears broken, but soon after you find out that the market was just testing it. Hence, you should think of support and resistance as zones rather than concrete numbers. So what this means is that support and resistance, they are not like a particular number, a particular place. Imagine you are on a live chat now. We'll eventually show you these things on a live chat, but the way these live charts are represented, they are represented with numbers, with values. So let's just assume we are using a number from 1 to 100 to represent the live chart. You won't say your support now, since support is the low level, your support is 1. No, your support can't just be 1. And your resistance can be just 100. You get? That is, we are assuming the value is from 1 to 100. For a support level, it can't just be a particular number. It will be a zone. What this means is that you can say, okay, I'm looking to buy from the support level, which is between 1 to 10, 1 to 5. You give it a zone. You give it a range of values where you are expecting it. So whenever market reacts at that particular zone, you are expecting the market, you execute your trade. So you won't say, okay, market must get to 1 before I buy. Market must get to 100 before I sell. No, it doesn't work that way. You have to give it a zone because you can't know precisely where market is planning to reverse or continue. You just have to predict a zone and then wait for the right moment to enter your trade, to execute your trade at that particular zone. So furthermore, when price passes through a resistance, that resistance could potentially become a support. Dammy, next page. So in the same way, when price passes through support, that support could potentially become a resistance. So this is self-explanatory. From the page you are seeing, it shows that when we have a resistance level, just as we said, if a resistance, normally we said you have to sell from a resistance. Now, if this resistance does not hold, if the resistance level does not hold and it gets broken, the market moves above it, you just wait for the market to break it properly and then you try to join the buy. Since market has broken the level you were expecting it to sell from. So what this is just telling us is that the resistance level, once it gets broken, market is expected to retest it, to come back to it and make it a support level, which means a high level before is now becoming a low level. Market breaks, just like the range I used from 1 to 100. Let's say our support is 1, our resistance is 100. Once markets, that 1 was a resistance for an initial support before. Let's say like 0.1, a lower number. So obviously market broke it. Then markets will retest to that level and then now start finding another high to go for. So when you know that, it just makes your work easy. You wait for reaction on that zone. If it respects it, fine, you continue to sell. If market breaks it, you allow it to break it very well. You allow it to come back to retest it. Then you join it with the buy. Same thing for when you want to sell. If there's a support level that you're expecting to buy from and it doesn't hold, you just wait for the market to break that particular support level properly. Then once it breaks it properly, you allow it to come back to that support level, which we call a retest. So anytime a forex trader tells you, I'm waiting for it to retest, don't assume they're telling you a big grammar. It's nothing too complex. So they're just waiting for it to come back to a particular zone it has tested before. So once it comes back to retest, then you join the sell, just as it has been shown in this picture. So in conclusion, the more often price test a level of support or resistance without breaking it, the stronger that area of support or resistance becomes. When a support or resistance level breaks, the strength of the move follow through move depends on how strongly the broken support or resistance had been holding. So what this means in particular is that if you have a support level or a resistance level, let's say, Dammy, can you go to page 6? Or no, this live chat example. Um, yeah, below it. Yeah, exactly. Thank you very much. So from this chart, I want everybody to look at it very well. What that last page was telling us was that once markets test a particular zone multiple times, it means that zone is very strong. It makes it stronger. So looking to your left in this particular page that we are, where the green arrow is pointing to support zones, you can see that, as we said, support or resistance is a zone, it's not a particular line. So you can see that zone, the green zone that arrow is pointing to, the green arrow, you can see the green zone it is pointing to. That place is a support level. Market tested that place like 3-4 times, depending on how you want to see the market. So market came there. Probably market is coming from a lower price. It comes there, breaks it. Just as we said, you allow market to retest. Market retested it. It started buying again, which means that level is strong. Then market still came back again to retest it, which makes it stronger again. So market came back to retest and it still continues buying. So what this means is that market retesting that level multiple times make it very strong. So this also applies to the resistance level. The resistance level, once market retests a resistance zone multiple times, it makes it stronger. You can see from the resistance zone, the red arrow pointing to the red zone. The market came to the resistance level one time, it breaks it, comes back there again. So whatever you're expecting now is to just sell from that zone since you feel the zone is strong. Markets came back to that zone, is sold again. So which obviously tells us that the zone is strong. So that's what that last paragraph is just telling us, that the more often price tests a level of support or resistance without breaking it, the stronger that area of support or resistance becomes. So you just have to have it in mind. Market is not a one-way traffic. You can't say because I'm expecting a buy throughout today means market will continue buying in your favor. No. Once market breaks a particular resistance that you feel, okay, I want to be selling from, once market breaks it, you wait for market to retest that zone, then you buy, which means there's already a change in the trend. It's not going down again. It has started moving up. Same way, once a support level is not respected and it breaks it, you won't be looking for a buy again. Now you start looking for sell opportunities. So I think that just covers everything on support and resistance. So I think I'll just hand over to Dammy to continue. Thank
So
you, guys.
thank you so much, my brother. So if you understand exactly what my brother just said, please can I just see your eye, to motivate? Can I just see your eye? Wow, that's nice. Can I just see like 20 or 30 eye, man? That's nice, that's nice, that's nice. So that is just about support and resistance. If you have any other question, the video is still going to be uploaded, then you can watch it very. So the second thing we are going into now was all this. How did all these have to be like they work together? The volume, spread, leverage, stop loss, take profit, lot size, pips. So in the first place, we are going to go like, what is volume? You have to actually know exactly. See, if you can hear me, please let me just see I in the comment section. If you can hear me, if you cannot hear me, just let me know. Yeah, cool, cool. I think everybody can hear me, so I think there is no issue. Please, if you cannot hear me, I think maybe it's your network, so you can stop testing me. So the volume. So let's straight to the volume. In forex trading, please can you stop writing something on everybody's here? So I don't think this is portrait for you writing something. Volume in trading. The number of trade of a lot trader in the currency pair or in the entire market within a specific time period, also known as turnover. One thing about this volume was actually being like how many trade you take, number of lots trades in a currency pair, at a specific times. So that means like the amount of the currency that changed hands from sellers to buyer. So that is actually so simple. It's not hard. It's just so simple. It's just the number of a lot traders. You understand? So let's go to spread. So the spread is the difference between the bid and the ask price. If I don't know if a lot of you have a demon account or you don't have a demon account, but if you enter a trade, where you enter, the particular place where you enter won't be the particular place where the market, where if you are in profit, where it will start giving you the profit. There will be some little gap. Why? Because that will be the commission. I tell you before, we have 10 minutes to end this meeting. So I tell you yesterday, like your broker, they are like a middleman to you. So they come in to get some money from you. So on every trade you took, either you take a loss on it, either you take a profit, they will always take their own commission for every trade you placed. So that is that about that. So any trade, and then we have a lot of we have a lot of currency pair. I explained what currency pair actually means yesterday. So like EUR, this is one country, if you don't forget. And this is another country also. USD is another country also. So both of them come together. This is it. So you see, the rate may be 1.1144 and 1.1146. This means that the EUR USD has a 2 pips spread. Like when you enter, before you make your profit, you understand. That will be their own commission the traders actually took from you. So without you trading, I don't think they are going to eat. Don't forget I read it yesterday, like they are like a middleman. So if you don't deposit, there is no way they can see a commission from you. If you don't place a trade, there is no way they can see a commission from you. So that is that about spread. So let's move to the next, which is leverage. So there is always leverage in every account. It is like you borrowed funds. Yes, Yes, it's like borrow fund, exactly. Because sometimes when you enter a trade and you feel like you're in both profit or loss, leverage will always be like it is just common for everybody. So when you start trading and when you start, maybe you are using a demo, maybe you don't have a demo, you can just go straight and download a MetaTrader 5. Demo account will come with it. Nobody's going to send you any link. Just go ahead on your phone, Android, iPhone, download MetaTrader 5, sign in. It will show you then that is it. Then you also have already been a profitable forex trader. It starts with one step. So it was just like a borrowed funds, exactly, available from their cash balance alone. So that this is how you make use of the leverage because it was actually a borrowed fund. That is how it's good. It is not big deal. So let's go to stop loss. Stop loss is just like, if you can read the third paragraph, you say taking a loss is a part. You see this, taking a loss is a part. Forex is not like 100% sure, and it's not like it's not sure. Like a trade, the trade you want to place, you are not 100% sure of what you want to take. Maybe you made a little mistake. Maybe you made a little mistake when you are trying to, analyze the market and you are trying to do everything. There will always be a little mistake. So sometimes the stop loss means what you set to avoid, like, is a particular place. Like, let me try to use my my chart for you. So trading, it was actually simple. Imagine just say this. Imagine you set your SL here. I just want to use it to do an example so you guys can understand clearly. Imagine you set your SL here, and you buy here just because you see like this one is valid. Then you say you are going to take a risk here. Then you put your entering is here. Don't forget your entering is here. Then you put your SL here. If you can see it clearly, the market actually dropped to here. But your stop loss, once you set your stop loss here, the stop loss will manage the money inside your account. You will calculate. If imagine you want to lose $5, $10, $20, $50. When the market come here, then it will stop right away. It will close automatically. When you may set it and you may just leave it there and then it will just close automatically without even looking at it once you set your stop loss. And same thing happen to take profit too. TP. Imagine you set your TP here and the market come to the TP, it's going to close automatically. So it's like the stop loss is very, very good. If you can see here, this is a good money management order that help to prevent a trader from accruing more loss in the market. So it's like being like you don't want to, you have $100 example, and you want to risk $10. So then you calculate your stop loss. The stop loss here is $10. Once the market come to your stop loss, then your trade will close automatically. That means you lose what? You lose $10. So it won't be like it will blow your account. No. A lot of trader are greedy and aggressive. So that's the reason why you see a lot of people blowing accounts. You can prevent your money from blowing. Like I want to lose $5 and you can lose $5. If you have $1,000, you can say I want to risk $15, then you can risk $15. You understand? So you can enter this price just as you are entering a trade, but prefer after the trade has started running. So you put the SL when you enter the buy now, pan. You enter the buy, then you put your SL. The SL will be below. Your stop loss will be below. Then once the market comes to your SL, that is done. It will close it automatically. But once the market did not reach your SL, then it will keep going your way because you prefer like you want the market should buy. Then it will continue buying. So if you actually understand exactly what I just explained, can I just, see your eye? I think it's very, very important if all of us actually go along with us. Wow, that's cool. So stop loss was actually one of the most important thing in forex trader if you want to go, don't understand where. So if you do not understand where this class is going to be recorded, then you can actually go back to watch. I didn't understand. Yes, that's good. I love when you bring out your opinion for it. So I think this class is going to be is going to be ending right now. Then I'm going to send another link. So I prefer you guys should join the link so fast, so I can take the S stop loss again. I think it's very, very important for you guys to actually grab something before we continue to the next. So see you in like, let me just say, see you in like 3 minutes.